Let's get more on the market action to the payrolls report with a NYSE senior market strategist, Michael Reinking here. Michael, thanks so much for joining us in studio here on the day.
Hi, Brad. Thanks for having me in.
Absolutely. All right. So you saw the data like we did this morning. Non-farm payroll headline number came in weaker than expected. Unemployment rate, slight tick lower here, but ultimately, what is the market latching onto from your perspective here?
Yeah, so I think unfortunately, I don't think today's data really gave us a definitive answer in many ways,
Which
right?
is weird because the CME FedWatch probabilities, they jumped and we saw a significant switch there.
Well, we're back to kind of a 50-50 between 25 and 50 basis points. So, that is, a coin flip, right? So it does,
coin.
Right? So it doesn't necessarily give you that definitive answer, which I think everybody was really hoping for. Right, so we did see a little bit of improvement in the headline non-farm payrolls number, but the revisions to last month, really, kind of offset that quite a bit, right? And if you look back historically, we do tend to see positive revisions to July. So the last 7 Julys we've had positive revisions, right? So that actually strikes me as a little bit more negative. From that perspective, we also tend to see positive revisions in August. Right, so 15 of the last 19 years we've seen positive revisions. So that'll be something to pay attention to. I think in terms of the unemployment rate, right, the bar was very low for that to tick back down to 4.2%. It was really kind of a rounding error as of last month, and we did see kind of that move lower in the temporary layoffs that people were kind of focused on from last month. Unfortunately, I don't think it gives you a definitive answer from a Federal Reserve perspective. Right, there's a lot of would've, could've, should've. That'll kind of play in here. I still lean to the idea that we'll probably see 25 basis points at this point, just given that that the central bank likes to move methodically with consensus, and unless we start to see, today's the last day before the Fed blackout window, so unless they start to get some messaging from either Fed Williams or Waller today, I'd be surprised to see a 50.
Is the equity market accurately pricing in, I don't want to say softness, the slowing, maybe the normalization that we're seeing in the labor market that's not necessarily yet at a deterioration, but is the equity market ready for that slowness to continue that we've started to see as a trend?
Right, and I think that's really the big concern, right? So, do you start to see that snowball effect? And that's, and that kind of goes back to the Federal Reserve and the would've, could've, should've. If they had cut in July, right, that would have been, could have signaled that as a more preemptive cut. At this point, it's a little harder to say that the embarking on an easing cycle from here is really preemptive. Right now, we're starting to get into that reactive phase. And then in terms of kind of equity markets, right, it's gonna take some time. You did see quite a bit of clenching up ahead of this number, right? You saw the VIX moving back into the low 20s, right? A little bit of deja vu to the start of August, right? And so from here, I think there's a lot of kind of things you can watch. Definitively at the open, we're not getting a clear signal from the markets. We're at the S&P 500 is at a key technical level right around 5,500 with the 50-day. Seeing the VIX move back below 20 is a positive, right? So that may be a little bit more supportive. And then we need to kind of watch the currency situation as well.
You mentioned the Fed speakers that are going to be out in force today before that blackout period begins here. And Williams is out speaking today, essentially, catch these bars before the blackout period. And one of the things that he's saying is now seems appropriate to lower the Fed funds rate. He goes on to say that he's ready to start the process of rate cuts and that there's confidence rising as well, that inflation pressures are ebbing. All of that considered, the pathway and the process, what do you think that leads them to in terms of the thinking towards the next terminal rate that the markets might have on the docket here, keep in mind?
Yeah, and that's really, I think there's a lot of debate about 25 or 50, but I think you highlight the right point, right? That it's really the destination. It's not how we necessarily start this process. Markets are pricing in over 200 basis points of rate cuts by the end of next year. If you think about that and look back to previous cutting cycles, right, that is, at the start of that cutting cycle, we're already pricing in more than markets had in previous cycles, right? So we've seen, markets get ahead of themselves multiple times during this cycle. You think back to kind of the beginning of the year, right, and where we were pricing in 6 or 7 rate cuts by the end of this year. So hopefully, I think, from my perspective, you want to continue to see the economic data come in reasonably strong, you want to see less rate cuts. You don't necessarily want to see 200 basis points of rate cuts, right? A slower process will be better received by equity markets.
I'm fascinated by the moves that we're seeing in the equity market today. When we took a look at futures on the heels of that NFP report, you did see a little bit of a rally in some of the big tech names, particularly in the Mag 7. Now that's reversing. Now we're seeing pressure on NVIDIA. We're seeing the NASDAQ under more pressure. It had kind of reversed its earlier downside moves, and now we're right back where we started. What does that tell you? Is this a risk-off move? Is the market freaked out about the non-farm payrolls? What is the thesis here?
Yeah. I mean, at this point, kind of hovering around unchanged. Right, we had a couple of days, where we pulled back. We started the month of September, pretty negatively, and I think this is more of a digestion move. It's really hard to say we're getting a definitive answer here in the first 15 minutes of trading. I would say, watch that 5,500 level, right, in the S&P. See, we want to get back above the 50-day moving average. There is a gap down, from August 15th, where we had the retail sales report, right around 54.60, right? So filling that gap, might make some sense, but then I think really just paying attention to volatility, right? Because we've seen the systematic flows that have been driving this market, right? It really drove the market in August, right? And we're going to continue to see that. So if we can't see the volatility start to compress again, right? That's going to bring in some more of that systematic de-risking. And as many of your guests have pointed out, September, October does tend to be kind of a difficult time period. Not only just from a general seasonal perspective, but also ahead of elections.
Just lastly here, one of the huge questions that has been my favorite question to ask over the course of this week, because tech is always sexy to talk about, but historically, we've seen tech be the beneficiary of rate cutting cycles. Do you think that's the same case this time around, given how far tech has run at this juncture?
Well, tech has really become sort of this, it's evolved over the last couple of years, right? And they've now become, these all-weather stocks, right? So depending on the environment, you can make the case that it's a defensive stock or not, right? I think what we're seeing kind of right now, is very much driven by the AI, kind of by the AI momentum, and we're having a little bit of a gut check, right? So, there's a bit of a digestion phase that we're starting to see, kind of with all this AI leadership, right? There's questions, there's bigger questions about the spending, when we're going to start to see, kind of that start to help and impact the bottom line, and it's going to take some time. So I think there's a bit of a digestion phase here, that can lead to stocks. Stocks can correct, via time or price, right? So if we can see some of these stocks just start to stabilize, right, and that will kind of allow the breadth of the market to kind of hold us up and continue to move higher. We just need to see some stabilization there.
All right, Michael, thank you so much for joining us this morning. Really appreciate you.
Not just
coming
joining
up
us.
from the NYSE.
He left his Giants at the NYSE to the NYSE to come be with us. Thank you, Michael.
Season,
that's nice.
Appreciate it, guys.
Best time of the year. All right, Michael, thank you so much. Really appreciate it.